Bitcoin is attempting to make the next directional move to the downside. Let's go ahead, do an analysis on the charts, and see what they're telling us. Okay, what is going on, MegaWhale team? Welcome back to the channel, guys. Thank you for tuning into today's video. We're going to go ahead and take a look at Bitcoin today. And obviously, I hope you're all having a fantastic day, enjoying the weekend, getting some sun, getting outside, enjoying what you guys like to do. But let's go ahead and get into it. So obviously, Bitcoin over here is retesting this uptrending support line that we have been developing for quite some time now. We had a numerous amounts of retests, including this fake out below it on the 14th of November, about a week ago, about 5 days ago now. But ever since then, we have respectively been testing this trend line, bouncing from it, but not quite getting over it. Again, to the upside, we are still waiting for that breakout of that $17,000 level, breaking that $17,000 level, clearing this little local high that we created over here would confirm that next move upwards. Until then, we are very much in a bearish pennant formation, okay, a bearish pennant formation getting rejected by this midline, and that is pressing us towards the downside. We'll come back and talk about that in a bit. Now, before we get into the crux of the video, smash the like button, comment, subscribe to the channel. Got a lot of great comments on yesterday's video. I did answer a few already, and maybe we'll go through and answer a couple more today. And obviously, guys, if you are interested in joining the Telegram channel, it's completely free. You can join via the link down below. We post all of our charts, analysis, updates, information, cool little posts, and all of our videos in here to keep you guys up to date with the market, the charts, and everything in between. And of course, if you're interested in VIP, you can contact us via the membership details, or you can look at our trading track record from February 2021 all the way up to present to get access. We've got over 500 members in our VIP channel as of current, which is absolutely insane. Let's get into the crux of today's video. So we'll start with the market data, and we'll go ahead and take a look at the quarterly. Right now, we are still negative for quarter four. Again, the first time we would ever have 4 negative quarters in a row on Bitcoin if this quarter does close. So we've got about 40 days or so until the end of the year. 40 days we have to get back into green, or we're going to see the first ever 4-quarter red close on Bitcoin's history, which is pretty interesting nonetheless. November is around negative 18.97. Again, it's come down a little bit from yesterday. We did get rejected from that 17,000 level, get rejected from that 16,800. We're pushing down now to about 16,600, which is a short-term horizontal support. We're going to probably test 16,600 for a bit before we make that next move again. We'll discuss that in a bit. And volatility has not changed once again. As we've been saying already, although volatility is high, the change in volatility over the last couple of days has been insignificant. We've basically been remaining at that 4.1. This is a 30-day period, guys, so it takes the average over a 30-day period. But if you have noticed, in the last 6 days or so, we haven't really changed. So overall volatility right now is incredibly low. And we know volatility is low, but so if we look at the price action, we can see we are in this sideways consolidation. So generally, when volatility is low, we have these consolidations. When volatility increases, we have these directional moves. If you remember back over here, the volatility spiked upwards and we saw this directional move to the downside. So generally, we have consolidations or compressions, then we have expansions or growths in volatility, and that's where we get those moves to the upside or the downside when that volatility comes through. Because volatility, in essence, is trading volume, okay? And we can confirm that if we go ahead and look at 24-hour liquidations, very, very low. It's been dwindling down every single day. A couple of days ago, it's 120. The day before, it was 60. Now it's 29 million. So very, very low liquidations. Again, representing tight trading ranges, okay, and not a lot of volatility in either direction. We are very much in this compression zone at the apex of our pennant, and we're about to make the next move soon. So definitely something to keep in mind, guys. Let's go ahead and take a look at Bitcoin. And more importantly, guys, before we actually do that, let's go ahead and talk about the rest of the markets. Very, very relevant stuff. So DXY has actually come down. It's bounced again from this 106. We did lose it temporarily, bounced again from 106 again. It is the weekend now, so this ain't going to be moving right now, so it's hard to say what's going to happen. But of course, if we do clear this top over here, we will be continuing up to 107.5. This is, of course, bearish for crypto. It's bearish for stocks, okay? The DXY goes upwards. We generally see risk assets fall. Total cryptocurrency market cap isn't looking phenomenal here. Again, it is printing quite some bearish candles over here, and it looks like it's going to make one more scam push upwards before we see any sort of collapse. again, it does look like it's aiming back down towards this level. We are very much looking at these levels on the total cryptocurrency market cap. Once again, the total cryptocurrency market cap is going to be the most important chart right now in terms of how the whole market is looking. And basically, we're looking at this for points of potential support, macro horizontal levels that can indicate points of support, and more importantly, points of reversal and potential bottoms of Bitcoin. So the levels we're looking at right now is, of course, this level here. We're going to see how the total cryptocurrency market cap responds within this level, whether it bounces from here, whether it loses this level, and over here, okay? So we're looking at reversals above this point. We're looking at continuations below this point. Continuations taking us downwards to here. Reversals occurring once this diagonal level is actually lost or broken above once again. So our reversal occurs for Bitcoin above here. Our continuation for Bitcoin to the downside. If we're not talking about short term, we're talking about a larger time frame over here, you know, daily, weekly, we're looking for a continuation below this level. S&P 500 and Dow Jones. Dow Jones looking pretty much in exactly the same spot, still getting rejected from 34,000. Major rejection point over here, guys. If we do get pushed above 34,000, we will see a continuation upwards to 35.4, that being the bear market resistance. Of course, if we do get rejected from here, we can see anything about 33 down to about 32 for our targets again, retesting that downward trending resistance. Moving up over here to the S&P 500, exactly the same thing. The difference is this is a psychological resistance at 4,000, and that psychological resistance is sitting underneath this downward trending resistance, which represents the entire bear market. It's falling, expanding wedge, a downwards consolidation, a break to the upside, okay, will be expected a move back over here. Whenever that does occur, okay, it could take a lot of time, but a break to the upside based on measured moves, we do look for retests of these initial top points on the expanding wedges. So generally, when you look at an expanding wedge, we have, you know, two declining trend lines which are expanding. Okay, a general measured move, if say for example the price does something like this, okay, and then whatever, a general measured move for an expanding wedge from the point of breakout, say for example the breakout is over here, we're looking for a measured move, okay, back to the top range of that point. So the measured move goes something like that. Usually when you look at wedges, you take the distance between the tops and bottom points, and that is your distance. Coincidentally, that actually lines up pretty well, but usually we're taking those breakout points to the peaks to actually get our measured move for that. So the measured move should theoretically take us back here whenever it occurs. Now, like I just said, if we do get the DXY rising, get cryptocurrency falling, we get everything dropping back down, we could see new lows, we could see 3,600 again, potentially even new lows if everything goes much, much worse. Bond yields are starting to climb, 4 years, 10 years are actually starting to climb here, and we've already seen 2 years have actually climbed back into this rising ascending channel. And of course, this is bearish of the market over here. It does represent, you know, this drop down over here, this period of potential fake out where markets are starting to look good again, the economy is looking good again, but the bond yields are climbing. Bond yields climbing equals US dollar gaining strength. If the US dollar gains strength, money flows out of assets back into the DXY and asset prices fall, okay? Let's go ahead and get into the cryptocurrency market though. That's what we're here for. So like we said already at the start of the video, we are seeing some sort of attempt to break down from this pennant formation. And the pennant formation is quite relevant as this is basically the only market structure we have at the moment on a smaller time frame that has been developed through all this chaos. Of course, as you've been following the channel, as you've been watching, we've seen a few different market structures develop here. We've had descending trend lines around about this level over here. We had this massive descending trend line over here, which we broke to the upside. We retested. We had other market structures developing, but on the larger time frame now, we've expanded quite far over here. We have developed a pretty clear pennant. Now, the pennant isn't confirmed to break down yet. What we're looking for confirmations, we can look for a few things. And the amount of elements of confirmation you look for when trading is entirely up to your risk tolerance, okay? So generally, we can have 3 or 4 different points of confirmation. We can have 2 confirmation points, or if you are risk seeking, you can even just wait for 1 confirmation point. So obviously, first confirmation points are generally price action, so loss or break of descending trend lines or any trend line, no matter of fact. The second confirmation points we look for are resistance support flips or support resistance flips, meaning that trend line has been lost. Okay, point confirmation 1, the trend line is being retested. Confirmation 2 upon a rejection. Okay, so it's been retested as resistance, and that retest of resistance has confirmed that is now resistance. But one of the ones I like to look for mostly is momentum. So we'll go ahead and draw a trend line across the RS over here. And we're taking those trend lines to our peaks of the price action. So obviously the peak lows over here, okay? The peak lows down over here. And of course, we don't actually have that crossover yet. So we've had the price break down from this trend line. We have not had the RSI drop below that trend line as of yet, meaning the price action has moved down, but the momentum is not indicating a move down just of yet. Now, it doesn't mean the momentum can't catch up, but what it does mean when that momentum crosses this trend line over here, it will confirm that next move down and we will see a continuation in price action. Again, depending on how your risk tolerance is, depending on how risk adverse you are, will determine how many points of confirmation you wait for until you enter trades, or you wait for before making decisions, or even you play a role in weighting up your analysis. Again, you can have all of your points of confirmation met and the price can still go in the opposite direction. We have seen that before. Sometimes the price doesn't move on technicals alone, it moves on external data, news events such as the FTX crash, economic news, hacks, heaps of different things can influence. So systematic risk as well can influence the market and make it move in ways in which the data cannot actually predict or suggest. Remember, on this channel, guys, we focus on technicals, we focus on structural data, we focus on the price action, okay? We talk about the economy a bit, we talk about implications of that leading up to economic releases, okay? Obviously, we have a background in economics and finance, but we are primarily making a lot of our assessments based on the data available. So a lot of the times when we see the data shift in real time, it can shift these analyses a little bit, and therefore you do need to be aware the more points of confirmation you have, the potentially worse entry points you're going to get, but the more confidence you are going to be in your trade. So here's an analogy I'll give you, or a question I'll ask you. Would you rather enter a trade that has a greater risk return, okay, but a greater chance of getting stopped out on, or would you rather enter a trade that has a lower rate of return, but a greater chance, and a lower chance of you getting stopped out on? So it kind of comes down to personal risk tolerance, okay? If you're risk seeking, you're more likely to enter on these breakouts, known as breakout traders. If you're more risk adverse, you're maybe waiting for a bit more confirmation, okay? So we are waiting for our breakdown over here for a continuation. If we look at some of our moving averages over here, we can see we have got some rejections on these moving averages. We'll bring them up in a second. We can see over here the 50 EMA has been acting as resistance for quite some time over here, not quite getting above that 50 EMA. And every time we do get above that 50 EMA, we're kind of rejecting from that 16,800 level, which was represented by this gray box over here. So again, indicating a lot of selling pressure over here, decreasing volume, decreasing trading, volatility. Price action is moving downwards, momentum is starting to top out, okay, heading downwards, of course, represented by this uptrending trend line, and the price action is starting to crack towards the downside. So again, it's looking like the bearish pressure, the selling pressure is definitely rising, and we're going to see a move soon. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. Let's take a look at an indicator we don't use too much, and this is the Bollinger Bands. I want to see if I can see something over here. Okay, so the Bollinger Bands is quite interesting. There's a few different strategies you can use with the Bollinger Bands. I think I've actually done a video on the Bollinger Bands on this channel, but we usually look for volatility, compression, and then expansion again on Bollinger Bands. So generally when we have the bands separating, I'm gonna go ahead and remove some of this stuff. When we have the bands separating like this, okay, big separations in the bands, whether the price action be very sporadic or just the bands kind of separating, this is indicating volatility. And you'll notice a common trend over the last few days. We've been talking about expansion and compression, not only on technicals and moving averages and volatility, but also a price action. They all kind of reflect the same thing. Now, a lot of people are saying, I need to use 100 different technical indicators. I need to use this indicator and that indicator to get to understand what's going on. They actually mostly all reflect the same thing, depending on what category of indicators you're using. So again, Bollinger Bands, what they're telling us here, they're telling us we had a lot of volatility in this area. The bigger the distance between the bands, the greater the volatility, okay? As we started moving along, we've seen a lot more compression of these bands occur, okay? So generally after periods of mass volatility, we have compression and then we have expansion, okay? And then the price action will make a directional move. Again, pretty much exactly what we've been saying today. We have compression of the moving averages, okay? The moving averages expand, the price expands from the moving averages on those larger time frames, and then when it comes back together and compresses, it makes a directional move. Same with the market volatility. When market volatility has a big increase, generally we see a directional move, then it plateaus, the price action moves sideways, consolidates, then it spikes, we see a directional move. And now again with the Bollinger Bands, we're seeing that exactly the same thing. So when you're doing technical analysis, guys, it's very important to understand the limitations and what your indicators actually tell you, so you're not going back and forth, looking at the same things 100 different ways, okay? Because at the end of the day, the moving averages, the Bollinger Bands, the volatility chart, they're telling us the same thing. They're telling us the same thing if you know how to read it. They're telling you the same thing. You don't even waste your time. But that's an example today of how you can use the indicators a little bit better. Sometimes more is not better. Sometimes less is more. Keeping it simple, keeping it readable, understandable. Don't overcomplicate your analysis. Generally, people who put too much onto their charts, these indicators I've heard of, these strange indicators, they don't generally work very well. And yeah, sure, maybe in backtesting they work phenomenally, but backtesting lagging indicators are always going to give results. So that's a whole nother ball game, guys, and maybe I'll get into it in another video, but I've been forward testing some strategies for quite some time, but I'll tell you right now, you see these videos on YouTube, oh, I back tested a strategy, the strategy made me X amount of money in a week or whatever. It's all a joke, guys. It's all literally, it's all a scam. Backtesting lagging indicators will always provide better results than what they will provide when you actually apply them forward testing. Because the nature of backtesting, the price moves and the indicators shift around the price action to always make it look more favorable, okay? So don't go off backtesting. If you want to use a strategy, if you develop the strategy, forward test it for 6 months, a year, 100 trades, 250 trades, look at the limitations of it, understand your exact win-loss ratio from it, understand when and where it can't be used, and then you can trade off it. But don't go on YouTube and type in best trading strategy for a 5-minute scalping. You're just going to find bullshit that's not going to work. I'm telling you right now. Anyway, guys, I'm going to leave the video there. The next directional move for Bitcoin will, of course, take us to those levels that we have talked about prior to this video, which is, of course, these green lines, okay? 16,400, 16,200, 15,800, and of course, 16,600, which was already reached from yesterday's video. We told you 16,600 is our first one, okay? We'll tick that to 16,600. Coming down to these levels next, of course, if we do push back above this gray box, we are most likely going to be breaking out of this downtrend. Breaking through this downtrend here results in moves up on the short-term time frame to here. Nothing significant is going to occur to the upside until 17,200 is broken. Okay, it's kind of in between these two green lines. When 17,200 is broken, we can then expect a pretty strong directional move. Until then, nothing to the upside is expected. Again, we've done our analysis yesterday. If you want to find out what our upside analysis is, check out yesterday's video. We go into a lot more details, but otherwise that is what we're going to be talking about today. So I'll keep it there. Enjoy your weekend, guys. Like, comment, subscribe, join our Telegram, and of course, if you're interested in learning analysis, if you're interested in becoming a trader, you can go ahead and contact us via the email below at Become a Trader. We give you a 12-week trading course. It's got everything you need to understand the markets, understand analysis, build you guys from the ground up to our skill level, precisely exactly with the indicators, with the assessments, with the knowledge we use in these videos, and obviously also implement in our own trading. Anyway, guys, I'll leave you with it, and I'll see you guys tomorrow. Cheers.